Continue our market talk and some investing strategy. David Stryzewski is with us, CEO of Sound Planning Group. Thank you for being with us. What do you think about the rally we're seeing? I'm saying new high here, new 52-week highs, but still new highs and somewhat broad-based. What are your thoughts on the rally we've seen?
Well, hey, great to be with you, Nicole, as always. Hey, I love a rally. In fact, my vote is that it goes up forever. But what goes up ultimately comes down, and we find ourselves in the midst of a cycle right now. But to be clear, I don't believe that this is a business as usual market rally like we're kind of used to. There's a record amount of cash that's still floating through our system right now. And I think it's important to understand that, the consumers, those who have some cash right now, they're out buying houses. They're out doing various things here today. But this is not a time to become complacent. I think this is actually probably best described as a pivot rally. What we know of a pivot rally is every single time that the Fed, is perceived to be stop hiking, that we get these, awesome and wonderful rallies. Now, this is the exact opposite of what Jerome Powell wants, though, because it's inflationary to see everything hit record highs, and we're continuing to talk about that. But this is the condition and the state of the market that we're in right now. One of the things that was kind of interesting is I was looking at some different commentators out there, and they were talking about how this rally might be a little bit different, but they were talking about, that we were retracing lows after a recession. And the one part I don't agree with is that we didn't hit a recession last year. And so if we didn't hit a recession last year, the retracement argument isn't actually the best one. I think, again, that's the pivot rally that we're seeing here today. So we haven't hit capitulation. We're kind of at the last leg of a market cycle, in my opinion, and who knows when it ends, but we're going to be taking advantage, certainly, while the opportunities are here.
Tell me about the Fed. So we have the Fed meeting next week. Your thoughts there?
Okay, so, as far as the Fed goes, Jerome Powell is actually pretty dovish. Okay, so his last hike was considered a hawkish hike, or I'm sorry, a dovish hike, and then he had a dovish pause. And then now we're kind of in this in-between place. I don't know, is he one or is he the other? So if we get one more hike, it seems like it's priced in and that they should do it if it's priced in to do. But the Fed is going to have some big problems on their hands, in my opinion. And the reason for that is that we've just flipped the capital market here, and credit is getting a lot more expensive. Your piece here on Carvana and how they had to, remetabolize their debt. I think that this is probably one of the first stories that we're going to hear, as there's going to be more stories coming out of organizations that need more capital, but they have to borrow at a much more expensive rate. The other thing that to note here right now is that if you follow the United States dollar, we've actually slipped quite a bit here within the last, month. And if we're looking at that, just understand something. Commodities are priced in U.S. dollars. And so if we're buying commodities in U.S. dollars, we can afford more because we make those U.S. dollars. Well, if the dollar has gone down and we can't afford as much, that means our money's worth less. That's actually an inflationary sign. And so depending on what the dollar does next from here, I think it's actually really going to determine what we're going to be seeing for the inflation print as time goes along. And so I think Powell recognizes that and knows that, although that's not a commonly understood deal, because this higher dollar has actually been doing Jerome Powell's job.
So you like healthcare and you like metals and miners. Tell me a little bit about the opportunities you see there, and even some foreign markets you said you like.
Sure. Well, let me just stay on this.
On each one,
Yeah, sure. So, what we're seeing right now is just like basically PE expansion. So earnings have to catch up. And so I'm a little bit concerned about getting overheated on those 7 to 10 stocks, that have just been rallying so hard here. As we look at healthcare, I think that this is important to understand. A lot of people would have gotten procedures during COVID, but were not allowed. And so as we look at and understand the healthcare system right now, they've got a lot of backlog stuff that's going on in there. And so I think that that's a very bullish place to be. Obviously, they finished strong here recently when we looked at numbers. And, which leads me to, so where are we at here today? I think as far as the cost of things being expensive, one of the cheapest plays today is actually metal miners. And what's interesting is that whether inflation goes up or the dollar weakens, they actually own commodities that can be really valuable in that time frame. And so I think metal miners have never been, frankly, better in comparison to what the S&P 500's valuation looks like. And then I guess the last in the international statement would be this. The world is changing right now. We're looking at more friend-shoring ideas with different industries, and so we're going away from China and we're looking at India. And we all know that India has been a back office, for many companies, Dell and others here over the years. But now they're starting to get into manufacturing. And as far as India goes, they have 2.5 million people every single year that are graduating with STEM degrees. And so these are the degrees of the future that are really going to be able to, build and establish and take us into some of this next place. So I think India is on the rise. I think this is a trend that is just beginning. And then ultimately, these things can carry for, decades even. So I think they're on the rise right now. I think the United States is doing fine. The labor market's really strong. But we have some challenges here in our macro world and backdrop that just leave me a little bit concerned. So I'm cautiously optimistic as we're going forward here into the future.
David Stryzewski, great to see you. Thank you always. Appreciate your strategy. Thanks. Sound Planning Group.
Appreciate it. Thank you, Nicole.
Coming up next.